XRP holders, listen carefully, because this is one of those conversations that most people avoid, not because it's dramatic, but because it's uncomfortable. This isn't about hype, price predictions, or panic. This is about understanding a real issue that exists beneath the surface, one that can impact how people think, react, and position themselves in this market. Before we get into it, if you value clear, level-headed discussions about crypto that focus on understanding instead of fear, tap the like button right now and subscribe to the channel. It helps more people find content that prioritizes clarity over noise. Now let's talk. The serious issue facing XRP holders isn't something you'll see clearly on a price chart. It's not a single announcement, and it's not a sudden event. It's a combination of misunderstanding, misaligned expectations, and narrative confusion that quietly creates risk over time. One of the biggest dangers in any market is believing you fully understand something when you actually don't. Confidence without clarity leads to emotional decisions, and emotional decisions are what markets punish the most. Many XRP holders believe the biggest risk is price going down. In reality, price movement is a symptom, not the disease. The deeper issue is how people interpret information, how they respond to uncertainty, and how quickly they let narratives replace critical thinking. XRP exists at a crossroads that most digital assets never reach. It sits between traditional finance and crypto culture. That position gives it potential, but it also creates tension. Traditional finance moves slowly, deliberately, and cautiously. Crypto culture moves fast, emotionally, and reacts instantly. When those two worlds collide, confusion is inevitable. A lot of XRP holders entered this space during moments of intense discussion, strong opinions, and extreme expectations. Over time, those expectations hardened into beliefs, and beliefs once formed are very difficult to challenge, even when new information appears. This is where the warning becomes important. Believing that an asset must behave a certain way because it should is dangerous. Markets don't operate on fairness, logic, or effort. They operate on structure, incentives, and timing. When expectations become rigid, every delay feels like manipulation, every pause feels like suppression, and every unexpected move feels personal. That mindset creates stress, frustration, and impulsive reactions. Another serious issue is overexposure to emotionally charged content. Videos, posts, and comments that use extreme language keep people engaged, but they also distort perception. When every update is framed as massive, shocking, or world-changing, normal market behavior starts to feel like failure. Over time, that warps judgment. XRP's development path has never been linear. It has been shaped by regulation, institutional requirements, legal scrutiny, and global financial realities. That path does not align with fast gratification. Expecting it to behave like a short-term speculative asset ignores its actual design. This doesn't mean XRP is guaranteed success. It means its timeline is different, and misunderstanding that timeline is where many holders struggle. Another issue is the assumption that awareness equals adoption. Just because people talk about something doesn't mean it's being used. And just because something isn't talked about constantly doesn't mean nothing is happening. Silence and irrelevance are not the same thing. Financial infrastructure often develops quietly. Testing, compliance, integration, and risk evaluation don't create headlines, but they matter more than viral attention. There's also the problem of identity. Some people stop seeing XRP as an asset and start seeing it as a cause. When that happens, objectivity disappears. Criticism feels like an attack. Neutral information feels threatening. That emotional attachment increases risk. Healthy investing requires the ability to say, I could be wrong. Without that ability, every outcome becomes stressful. Another serious issue is time horizon mismatch. Many holders think long-term, but emotionally react short-term. They say they're patient, but feel anxious during every quiet period. That internal conflict leads to inconsistent decisions. Patience isn't just waiting, it's emotional consistency. Markets are designed to exploit inconsistency. They reward people who can hold a rational framework through uncertainty and punish those who constantly shift based on mood. XRP holders also need to understand that regulation is not an on-off switch. It's a process. Clarity doesn't arrive all at once. It arrives in layers, interpretations, and gradual alignment. Expecting instant resolution creates false urgency. Urgency is expensive. Another issue is comparison. Watching other assets move faster creates doubt, but different assets have different risk profiles, different goals, and different constraints. Speed is not always an advantage. Sometimes sometimes it's a warning. XRP's challenge has never been technology alone. It has been perception, alignment, and trust. Those things take longer to build than code. There's also a structural issue that many don't talk about. Markets don't reward everyone at the same time. Early, patient, late, emotional. These groups experience outcomes differently. Understanding where you are matters more than predicting price. The warning here isn't sell or buy. That would be irresponsible. The warning is about mindset. If your confidence depends on daily confirmation, you're exposed. If your peace depends on price movement, you're exposed. If your belief cannot tolerate uncertainty, you're exposed. Strong positions are built on understanding, not reassurance. Another serious issue is information overload. Too much data without context creates paralysis. People confuse being informed with being constantly updated. Those are not the same thing. Sometimes the smartest move is to zoom out. XRP will continue to be debated. It will continue to attract strong opinions. That won't change. What can change is how individuals respond to that environment. The market doesn't punish optimism or skepticism. It punishes imbalance. Being aware of risks doesn't mean being afraid. It means being prepared. And the biggest risk isn't that XRP fails tomorrow. The biggest risk is making emotional decisions today based on expectations that were never realistic to begin with. Understanding that distinction is what separates calm participants from exhausted ones. This space doesn't need more warnings filled with fear. It needs warnings rooted in clarity. And clarity starts with recognizing that serious issues are often psychological before they are financial. If you can manage expectations, control emotional exposure, and maintain perspective, you reduce risk regardless of outcome. That's not exciting, but it's sustainable. And sustainability is what most people underestimate, and there's another layer to this issue that rarely gets discussed honestly, because it forces people to confront something uncomfortable about their own behavior. Most market stress doesn't come from external events. It comes from internal conflict. People say they understand volatility, but their reactions prove otherwise. They say they're long-term, but their emotions are tied to short-term movement. That gap between belief and behavior is where real damage happens. For XRP holders, this conflict can become especially intense because the asset exists in a constant state of debate. Every new opinion feels like a challenge. Every delay feels like a setback. Over time, that mental pressure builds, even if nothing materially changes. The market doesn't need to move for stress to increase. Perception alone can do that. Another serious issue is the expectation of validation. Many holders subconsciously wait for the market to prove them right. When that validation doesn't arrive on schedule, doubt creeps in. Doubt doesn't always lead to selling, but it often leads to over-monitoring. Checking charts too often, consuming too much commentary, reacting to every rumor. This behavior quietly erodes clarity. Markets reward decisiveness, but they punish obsession. XRP's story is complex, and complexity doesn't translate well to fast-moving platforms. Short clips, bold headlines, and simplified narratives struggle to capture nuance. As a result, people are often reacting to fragments, not full context. That creates distorted expectations. Another point that matters is the difference between possibility and probability. Just because something could happen doesn't mean it's likely to happen soon. Confusing those two leads to constant emotional swings. Hope spikes, disappointment follows, and the cycle repeats. This cycle is exhausting, and exhaustion leads to mistakes.